As of now, we're all aware what happened today in the stock market with everything was being selling off. Many indexes were all red. Everything was going down. Many losses across the entire world, pretty much. The first moment I noticed was when crypto started going down, since crypto runs 24/7. You can see sometimes some of the patterns as it starts. Then I get some alerts that the Japanese market is started on the red. Oof, 7%. Then I get another alert that Samsung is down 10%. So I was like, okay, let me start looking into this to see what's going on, because it seems it's going to be a really busy Monday. And indeed it was. I see many people from the politics side talking about Democrats this, or that Democrats that we need to bring Trump back in office. And the other people are saying, oh, this is somehow blaming Republicans for this. And I think people think we live in a totalitarian government or a socialist economy where the president has full control of everything that happens with the economy, which is ludicrous. It's ridiculous to even believe that. If you 100% believe that, you're full of it. I'm not saying that presidents and their policies don't have an influence. Of course they do, but it's not what happened. So what happened in Japan? Everything started in Japan. So Japan, for the past 30 years, they haven't increased the interest rates over 2%. And pretty much they only increased it, I believe, back in the 90s. And since the 90s, they have not increased it at all, which I'm going to provide you the data here, as you can see. So as you can see here on this graph from Bloomberg, the Bank of Japan policy rate has been below 2% in the last 30 years. And even since 1995, it has been below 1% throughout the last, 25, almost 30 years. And that makes investments cheap. It is cheap to print money in Japan. And since Japan was leading with inflation in the last decade that they had, with ridiculous inflation, with many other aspects of their oil value, which is a different type of video, Japan has maintained that. And what's been happening is a lot of companies, a lot of financial companies, were something that so the thing that happened was the carry trade. Carry trade means when you're buying, for example, in this case, another currency that's lower, for example, a currency that's at 0%, and versus a currency like, for example, the US dollar, which is right now the interest rate at 5%. So if you get into debt in Japanese yen, and then you buy US dollars, US stocks, you're going to be able to grow that money. So it's going to be very cheap to borrow that money. Therefore, you're going to be able to get a significant return. Versus in the US, where you still have a 5% interest rate, so it's going to cut into your W's. So I'm going to give you a brief example. That way it sort of makes sense. So before this increase in interest rate that Japan had, let's say you bought $1,000 in Japanese yen. And to round it off, let's say it's 161,000. And since you're buying that at 0%, anything that you invest, you're going to be able, your margins for getting a return are going to be bigger. But the problem is, as Japan increased the interest rate, making the currency stronger, what $1,000 used to buy you, what a $1 will buy you, which is 161. Now that dollar buys you 145. Meaning right there, you lost 10% on the potential gains that you do have. And the other problem related to this was margin calls. What happened with margin calls? The problem with margin calls is you're getting a loan to invest. And when your margin call is met, it's because there's an agreement. Once the amount of your investment goes below a certain percentage, the broker is like, hey, once this percentage is triggered, either you have to add funds from your own pocket because you're losing trade, or if it goes low enough, your broker, that way they don't lose money, they're gonna force you to sell, or they're going to sell for you. And then this triggered a cascade of problems. And that's pretty much what happened. Another thing basic is whenever a currency has a higher interest rate, it makes the currency stronger. Why? It's harder to get a loan on that currency. and also it inflates the value of commodities because it's easy to get that dollar. And what's been happening is the US dollar increased the interest rate to combat inflation. And that's pretty much what Japan is trying to do. The problem is the timing apparently couldn't have been worse. And so that's pretty much exactly what happened. And there's more information about all the stuff that happened relating to the job report from the US. There's another problem which I'm going to show you here in a second. So there's an indicator called the Sahm indicator, which tends to, I know we probably heard it many times, there's this indicator that always matches with recessions, but this one does not occur as often, but when it occurs, it seems to be fairly accurate when a recession it's already occurring. So as you can see here in this graph, the Sahm indicator was triggered due to the US unemployment related to recession. And the report that we recently had was 0.4. Usually when it's above 0.5, the economy, it's already in inflation. As you can see there in previous numbers, you can see in 57, you can see in 2001, 2008, or 2020. Therefore, that adds fear in the markets. And the problem is, since the whole economy globally is all interconnected, sometimes certain changes affect different currencies. I don't know if you guys were aware, when the US started increasing the interest rate back in 2022, I believe in March or April, the European Union had to do the same. Why? Because the goods that the US, so as us increasing our interest rates makes our currency stronger, we export inflation to Europe. Therefore, Europe has to be at a certain interest rates. That way, they're not affected by the inflation that we are exporting. So that is all these reasons, and that's also the criticism to the Bank of Japan of increasing the interest rate, especially at this time when it's not the economy of the US is bad. It is other related problems, which I can definitely get on onto a different video, because the numbers of the economy look good, but I think we all can feel how everything is super expensive, which is just pretty much inflation, but that's a longer video for a later time. All right, guys, that's it. I'll wrap it up with this, and I'll provide all the links for all the information that I found. And I'm sharing this video mainly because one of my sources is a Spanish economist, so not all speak Spanish, so I'll leave it with that.